How do you see financial health as service providers influencing concentration risk analysis?
Oh,
That's a
that's
tough
really,
one. Thank you,
yeah.
Kenya. That's hard.
So I'm not sure that it influences concentration risk in that our higher ratings on companies are making people concentrate more on individual third parties. There is some of that. I don't think we're creating systemic risk because of that. But the topic of concentration risk is a absolutely fascinating one, particularly right now with a lot of the Silicon Valley Bank and bank crises spillovers, because concentration risk is one of the big issues that SVB was faced with in its depositor base. And it also gives what I think is a really important lesson to everybody in third party risk management. And that's that the third parties people are working with are often highly concentrated in the third parties that they may be exposed to for things like capital. And just as we saw that a huge percentage of technology third parties that people work with had as their only bank Silicon Valley Bank, and therefore their ability to access deposits, 2 weekends ago, the concept of how exposed they were going to be on Monday, that was a radical sort of eye opener for a lot of people. And when you extend that out to thinking that a lot of those companies only get their financing, only borrow from one bank. If that bank is in trouble or that bank's credit standards change due to regulatory oversight or something else, all of a sudden access to capital for those companies becomes at greater risk, which is a major theme right now that everyone needs to be focusing on. So the issue of concentration risk question, I think, is a really interesting one and extremely timely.
It is. So I did a white paper a while ago on concentration risk. I like doing that because it makes me learn, right? I can't write about stuff I don't understand. So what we learned when we did that, there are different types of concentration risks. You mentioned entity level. So entity level is really all your eggs in one basket with the same third party. And when they're in trouble, you're in trouble, right? So activity level is kind of interesting as well, where you might have, following with the bank example, let's say that you have heavily outsourced one of your product lines. Like when I was with a bank, we outsourced pretty much everything on student loans. We funded it and we kept the name, and everything else went out. So that's an example of activity level concentration risk. And then there's geographic, fourth party, and I forget the other one off the top of my head. But it's interesting because financial health, it's inseparable from everything that you do. So to me, yeah, it does influence concentration risk, because if you're highly concentrated for something, you better have a close look at those third parties. And especially if it's a major revenue generator or something that's essential to your organization. Yeah, I would say that financial health is going to influence your thoughts on concentration risk big time. And if it doesn't, it should.